Good morning, and thank you very much for the warm welcome, and also from my side, a big thank you for the invitation for EIOPA to also be here today, sharing some perspective. And what a great introduction we had by Thea, highlighting the climate change as one of the challenges that the industry faces. And I will elaborate a bit more on that, and I will go through some slides to support. Basically, we have identified already for quite some time sustainability as one of the strategic priorities for EIOPA in light of the critical role that we see insurance and occupational pension sectors play in this regard. We see that through investments, but also through its underwriting activities, global warming affects the core of insurance activities. And for this reason, we need to take actions to make sure that ultimately we can continue to provide the coverage to the policyholders, to the society in the long term, despite the increased frequency and severity of climate-driven catastrophes. What we see in recent years is an increase in events, an increase in the number, in the frequency, but also the severity. And together with this, when we look historically, we see that there is a huge protection gap in the EEA. Our analysis has shown that looking back, starting from the 1980s, only around 25% of the economic losses triggered by climate change are covered, or by natural catastrophes more generally, are covered by insurance in Europe. So we have a huge gap, and we fear that with the climate change impacts, this gap may increase because the frequency of the events, because the exposures tend to increase because of phenomena like urbanization and the concentration of exposures. If you look at recent estimates, like the Sigma report that was recently published, you see that the forecast again for this year points to a large amount of losses, estimated 145 billion, starting already from the events in LA that we have observed in the beginning of the year. But what is more worrying is the trend, the historical trend, where we see a growth of 5 to 7% a year in natural catastrophe insured losses. So, as was mentioned, this creates the challenge in terms of ensuring affordable and available cover to the citizens, to the society, and insurance has a very critical role, a very central role to play in this regard. Just a few information, a few numbers. As you see on this slide, on the left hand, you see the evolution of the insured, of the economic losses over the, let's say, the last 40 years, and you see clearly a rising trend. What is more critical is that from the around 900 billion losses that we had in that period in the EU, around a fifth, so 20% of those losses were concentrated only in the last 3 years. And 2024 and 2025, at least as it seems for the moment, seem to confirm this trend. On the right-hand side, you see in blue the proportion of insured losses is actually going down. And if you drill down, you will see that this decrease is even more pronounced for the households with lower income. So the gap is widening, and it's affecting the more vulnerable of our society. So from EIOPA side, we started, let's say, one of the initial projects we tried to tackle this topic of protection gaps from, let's say, from different dimensions. One of the first initiatives we took was building this insurance protection gap dashboard, which from my perspective was quite a landmark development because it built a lot of awareness to the issue that we face. Of course, the data, you may argue, is not perfect. The methodologies are not fully developed, but that's exactly an example, and I think the approach that we should take more widely. We need to start, even if you don't have all the data, even if you don't have all the information, but a first step to start identifying, monitoring, assessing, quantifying these risks, sometimes starting with a simpler approach. The dashboard is there now since 2022. We are updating it every year, and it shows for a number of different perils what is, let's say, the historical, but also the existing gap that is identified in the different member states. Our plan is to update this dashboard every year, but also to do a more in-depth review. So every 5 years, so around 2027, we will be trying to refine the dashboard. And one of the ambitions that we would have, of course, depending on the data availability, would be to increase the granularity of the dashboard. Because currently, of course, it's country-wide, but it hides a bit the specificities and the variability that you have within a country. Of course, for that you need data, and we all know the data brings burden, but this is an important area where we believe more information would help also to tailor the efforts of the industry and the authorities more generally. So building on the identification, the quantification of the gap, we then started looking at the supply and the demand perspectives. Why do we have such gap? Is it because the insurance sector does not offer coverage? Is it because the customers don't buy insurance? And we found out that it's a bit of a mix of the two. Specifically on the demand side, we performed a few behavioral studies where we have seen that in many instances there is availability of insurance, but the consumers don't buy insurance because they perceive it as being too expensive, more than it actually is. They don't understand what insurance means. They find it too complicated. Or they simply expect that if there is a catastrophe, the government will step in and pay for the losses anyway. So we identified this lack of awareness. This is another reason that the consumers, the policyholders, they are not aware of the risks that they are actually exposed to. This lack of awareness is one of the priorities we identified. And we have been working on a potential tool targeted at the citizens, precisely with the intention to raise, based on the address of the policyholder, of the citizen, of the house owner, or of the business, to get some information on how high is the risk, what can be done about this risk. So it's not just quantifying the risk, but also supporting what measures can the property owner take to reduce this risk, what we call also impact underwriting, how you can cooperate with your insurance company to potentially come to a kind of a win-win situation where you take measures to lower the risk, lower the claims, but maybe also lower the premiums. This is what also the industry can do, because this is what you do in most of your business areas anyway. You drive behaviors, you promote risk awareness and risk reduction. So why should it be different for climate change related risks? Another area where the industry, of course, can play a role is about transparency on the terms. We just published an analysis looking at IPIDs where you see that lack of understanding is, in our view, another driver of protection gaps, that often the customers are not fully aware of what they have or not covered by their contract. So this tool would also look into this literacy. How does the system of insurance for natural catastrophes work in your country? Is it mandatory? Is it opt-in? Is it opt-out? And this is something that we believe might really play an important role in terms of reducing the gaps that we see today. And finally, a few words about another initiative that we have been working on, which is being, let's say, aware of the fact that in some cases, risks are growing to a level where they may become hard to insure by the private sector alone. We agree every player should have a role. This is not a challenge that the private sector alone can overcome. So we have worked together with our colleagues at the ECB to identify what measures could be taken at the European level in addition and building on what already exists at the private sector or at national schemes like the scheme you have in Romania. What could be done at the European level to potentially make insurance on natural catastrophes more available, more affordable, and lower protection gaps? Because if you would add another level of pooling, you could lower, let's say, the costs. What our analysis has shown is that there are a lot of benefits arising from insurance. Usually you see a faster economic recovery. Usually you see a lower burden on the public budgets. Usually you see this incentive for ex-ante risk management and risk reduction. But of course, these benefits, these externalities are not taken into account, let's say, in the individual decisions by policyholders and individual, let's say, insurers, which is the reason why then we often end on this large gap. And we believe that having this scheme could then contribute to address those causes and this market failure, as we called it. How would this scheme potentially look like? Basically, this would be built on two pillars. One reinsurance mechanism based on a private reinsurance approach, based on risk-based premiums, multi-peril, similar to what already exists in several member states. It might have state support or not, but it's not mandatory to have state support. And it would incentivize ex-ante adaptation, prevention, risk reduction measures. On the other side, it would be complemented by a so-called disaster fund, building on what we already have in the EU, that might contribute to support the member states in rebuilding assets that are not usually insured, like public infrastructure. This is also because we have observed that the existing framework often falls short of the challenges. What is important to say is that this builds on a ladder approach. We need every participant in the market to keep, let's say, skin in the game, to take their share of the losses, also to avoid moral hazard when everything is just shifted to the next level. And it would be supporting a risk-based approach and ex-ante mitigation and adaptation of risks. It's also important to highlight that, of course, what we have done is an initial proposal, mostly to trigger discussion. It's not fully specified in detail, but it requires political support at some point. It intends to build on the schemes that exist and not replace them. And of course, it should be compatible with existing rules at the European level. So that's a bit an overview of some of the activities that we have been developing. And hopefully today and in the future, we can continue discussing on how at the EU level, but also at the member state level, we can work together, not only as the insurance market, but also together with the governments and other stakeholders to overcome this challenge that we face today, lower protection gaps and ensure availability of society's protection and the role that our sector plays in the longer term. So thank you very much for your attention.